US dollar balls to the fucking moon. Let's break down all the key macro and technical talking points. Morning, 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 baby. Happy Friday. I hope we're all well and truly lit. Yes, we are back with our final trading day of the week in these beautiful markets. And guys, things panning out as we were looking for, as expected. As expected. People are worrying, people are in doubt about whether this dollar has another leg to the upside. And obviously, as we were looking for, we've gone over these macros time and time and time again. We were prepared, right? For the start of this week, in our weekend analysis, we were prepared for that upside pressure that was going to come in play for the dollar. It was just a matter of time. And I know there's some guys out there that are calling shorts from here. Well, they were calling shorts before this breakout to the upside. Give them a slap in the face. The dollar takes another extended move to the north. We've gone over all those macros. Things are just so much in favor of greenback strength. Okay. We've spoken about how there's just this massive economic and then soon to come monetary policy divergence between the United States, the dollar, and the rest of its peers. Look, for example, this morning, a solid example of that. Awful. And this just shows the shit state that the Eurozone is in. Do you remember how much I was stressing, when we were forecasting those additional shorts for Euro, which obviously came nicely into play? Remember how I was saying the Eurozone is in a shitty state, right? They've got a situation where growth is low. There's high public debt levels across the Eurozone and a number of economies. And then also, look at this morning, just reinforces what I said. Manufacturing PMI is dreadful, awful numbers, bad. Okay. So again, it just sort of reinforces the slowdown in the Eurozone economy. People, big players. You have to remember as well about real money flows. Where do these big boys want to put their money? Where do they want to put their money? They're not going to be putting them in the Eurozone. And if we're measuring economy versus economy, if we're looking at the Eurozone as a whole, we're looking at the United States as a whole, where do you think they would rather put their money? Where's that money flow going to go in terms of offering a decent yield, but also economic stability? You understand? It's a southbound train, euro dollar. Southbound train, and things will only get worse. This move will extend. All right? This move will extend. So poor data there. Also, same with the UK. I'm not surprised, right? There's a contraction there of 0.7%. Growth in the UK has been slowing down. We've seen the unemployment rate ticking higher. We've all kind of got this situation. Inflation's obviously a little bit above target in the UK. We've kind of got a bit of a stagflation there. It's the same as the Eurozone. I remember I said this earlier in the week. We've got a bit of a stagflation because we've got low growth in the UK. We've got low growth in the Eurozone, but then prices are still a little bit sticky. It's a bit stagflationary, okay, which is not a good place to be. So again, this is great for the dollar versus its peers, okay? It's really has this freaking edge. In terms of sort of yesterday as well, just on a data front, we had the unemployment claims for the United States, which is good. Again, look at this number, healthy. The last number as well. Look, this recent run of labor market data, like unemployment claims, less people claiming unemployment benefits. Bullish. It's bullish. We have a healthy labor market, guys, in the United States. We saw that at the last data reading, right? Average earnings are still good. People still getting paid, good wedge. Unemployment rate is still low. We've got people out there spending, stimulating the economy. It's expanding. Okay? Trump trade is only going to get inflationary. Yeah, things are only going to get inflationary. The dollar's edge versus its peers is going to be insane in 2025. It's going to be crazy. If we look back here, obviously we're looking for a breakout of this flag. You see things at the moment, it's really clean, right? We had this big flag here, breakout, retest, push. Here we had a nice flag. We didn't really sort of retest. We just sort of broke out there, little pullback, and then we broke. Look at this morning. Look at that, man. Look at it. Breaking through 107. Bravery 107 euro. Look, coming down to 10. Look, what did we say? Okay, with this flag, right? And I said, as soon as this zone gets taken out, poof, we're going to watch that 104.50. And I mean, stops are being triggered to the downside for sure. And it's a further exacerbated move. We're running into 104 as I speak right now this morning. Okay. Really, really nice. Beautiful stuff. And as I said to you guys already, when you look left, there may be, as I said to you, there may be a little bit room for pullback, a little bit consolidation once we see this drop. Maybe a little bit consolidation around sort of 104 towards 105. But ultimately, parity is in sight for euro dollar. If you ask me again, where's Dixie going to top out? I already said to you guys, we're going to run in towards 108, in my opinion. And there's a chance that we go for that short-lived push. Not short-lived push. There'll be a bout of volatility to suck us in towards 109. Okay, because that'll be the next major key area, and you can just sort of see it there looking left, not sort of see it. You can fucking see it clear as day. All right, so we may get this price quickly sucking to that 109 before then pulling back. And I don't know how deep the pullback will be. Okay, but what I do know is any pullback is going to be met with aggressive buying after we have that period of consolidation, profits being taken off the table. Aggressive dip buying. That's not the end of the dollar rally. Again, I know some guys are calling fucking dollar shorts. You crazy. You're crazy. I am still a big, strong dollar bull at the moment. So, yeah, guys, that's and then of course, just to throw it into the mix as well. Obviously, we've got the geopolitical tensions, right, which have been further escalating with Russia and Ukraine. So that's been fueling some safe haven into dollar as well. There's just, guys, there's endless factors that are supporting the greenback right now. And as I say, once Trump gets inaugurated and those policies start being implemented in 2025, and because Trump's, as I said to you guys before, he's going to hit the ground running. Okay, he's going to really hit the ground hard, running fast and implementing things, wanting to make a change. And I think he's going to have quite a fast and hard impact, which will really slow down the FOMC. I mean, they're already going to be slowing down in terms of their rate cuts, and it will just further reinforce what I've been saying about the divergence. But on a serious level, in terms of interest rate differentials, the people are just going to be wanting to flood still into the United States while the economy's strong as well, especially with all those pro-growth policies from Trump. So yeah, guys, a lot of good shit there. A lot of good shit right now supporting the greenback. So guys, as always, I hope you found value in this video. This is always just a little snippet taken from our daily market breakdowns, where we break down all these key talking points and macros, the key underlying themes, the data, the news flow, and then how that then marries. How does that translate on the charts for potential trade ideas, potential for us to execute? We understand the why. Now, how? How do we enter? When do we enter? Obviously, we break that down on a daily basis via the TFTC premium community. Otherwise, if you do want the knowledge, it's there for you to grab via the TFTC fundamental bootcamp with hours of value. Everything from this head here is simplified and is very actionable. Other than that, keep watching the video. Stay lit, let's get it.